everybody. Welcome to the Tuesday morning edition of the Daily Market Commentary. Hope everybody had a great day on Monday, and you are all just excited and fired up about a killer Tuesday. For those of you new to the channel, do me a favor, click that little subscribe button down below. Anybody you know that might be interested in the video, please share the info with them. And those of you that have come in, give me a much appreciated like or a comment. It makes the video a lot more searchable on YouTube and all those fun other interweb search capabilities. All right. So let's dive right in. Everybody knows that when I do these videos, we do them every day and we leave the lines on the charts because we want to show you how trades develop over time. And today's a really good day to do that. But because I do this also in conjunction with my Twitter feed. And so, the best way to get the use out of the daily market commentary is to also catch the Twitter feed where I post the updates to the trades as they happen throughout the day. So starting with the S&P. Now, yesterday I talked about how I felt like the S&P had some weakness in it, but I didn't have a strong, compelling reason to get in one direction or the other because none of these levels felt like levels that it would stop on. And in the overnight hours, we've been shown that that's pretty much what's happening. Now, there is a potential reversal down here that I'm going to hold out hope for. And there's no reason for me to get long until we get to that area. I am going to add this. This little region right here as a potential short zone. Now, the reason this is a good potential short zone, I'm not a huge fan of when it was formed. The time of the day that it was formed is pretty terrible, as my 2-year-old would say. That's terrible. But I love the form. I love that we have a drop, a little bit of a base, and then another drop right at an area that was a former level of support, right? Traditional technical analysis, support, and resistance does still have some validity, which also makes me look at this level right here because this level here was old resistance, which became new support. So both of which are pretty good levels. I'm choosing the one slightly higher up only because it's a function of if I'm going to get short, I'm going to get short a little closer to the top. Is really the best way to put it. So there's a potential S&P level. I'm going to change this to a dashed line, and I'm going to probably set an alert to tell me when price gets up above this area here, because I want to make sure of the arrival and what the arrival looks like. So once we break through this level here, I'm going to have an alert set up to tell me what it looks like coming into here. Doesn't mean I'm going to take it. I do believe in utilizing alerts very, very often so that I don't have to sit and babysit the trades. But I'm also, I'm not gonna be a total set it and forget it kind of guy. All right, looking at the Nasdaq, so the NQ. So in the NQ, we had price drop down into this region, and we got a little bounce out of it yesterday. Now, this is really when yesterday I had posted a tweet following. Let me just kind of share this with you. So yesterday after the video, I had said NQ level, a nice little bouncy bounce, protect profits now. And then the CL level explains the use of a dashed line. Now, this was a response to my daily market commentary for the day. So what does that mean? Well, going back and looking at it, we did get a little bounce off of it. Price came back to its opposing fair price value area, and that's your profit-taking opportunity, because the next time, look what it did. Blew right through. Now, why did it blow right through? Well, it blew right through because, look, we traded all the way to the bottom of it right here. Matter of fact, I thought I was going to get stopped out, but we traded right to the bottom of it before it then popped up. So now we can take this and remove this area. This area is no longer valid. And now we're looking at this one down here and this one way down here. So this tells me that there's room for price to continue to fall for the rest of today. Now, the level that I found on the S&P is the equivalent of this little level in the Nasdaq. So we're weaker in the S&P than we are in the Nasdaq, and I think that's because a lot of our value bigger cap stocks are the ones that are taking the bigger hits in the overnight sessions. So nothing really that I want to add to the Nasdaq. I have the S&P level as a potential. Crude oil. So here we have a dashed line. Remember, the dashed line means we get short as price comes into the level, and then we get long as it comes back out, unless it breaks the level, and then we cancel the trade. Now, in this case, the trade would have been canceled, so we are not going to capitalize on this big old move here. What's worse than what's worse than missing out on a big old move here is to get long right here because I didn't follow the rules, then get stopped out and then see the big old move. That's utterly infuriating and super duper frustrating. I'm okay missing trades. What I'm not okay doing is getting into the wrong trade only to have it go exactly the opposite of the way I thought it was going to go in the first place. So that being said, now what I'm going to do is I'm going to stay back for just a little bit and see what happens. Now, if you are so inclined throughout the day, you're going to get a little potential right in through here, a little potential reversal right in through this region. This was formed right around the London Open, so kind of keep an eye on this region down here. This is once again on a 15-minute chart, so slightly lower probability, but keep an eye for a potential reversal in this 63.75 area. Looking at gold, we've still fallen from our 1313 level way up here. This is our next potential reversal would be down in here. Not a whole lot that I'm in love with at the moment. We are putting in somewhat of a trend channel. So let's see if we get a bounce off of where we are right now. If you're so inclined and wanted to try a candle-to-candle style of a trade at this level, you certainly could give that some love. Into the bonds. Now the bonds, once again, dashed line trade. So let me open this bad boy up. In this dashed line trade, price came into the level. Okay, let me pull this down to, like, say, a 5-minute chart so you can see. In this dashed line trade, price came into the level. This one is going to get you filled because you get in halfway in, you get long as it comes, or you get short as it comes back out of the level, and then it turns around and stops you out. Unfortunately, these things are going to happen on every style of trade, but this one had the, sometimes the dashed line trades, you'll see price may touch in here, then come down and then blow through, but this one actually traded over halfway into the zone. So getting you over halfway into the zone would trigger the execution and then getting you short as it comes back out of this level. Now, it doesn't have to get you short. It depends on your your trade entry, if you will, on when it does get you in and get you short, based upon how much wiggle room you give it coming out. Some people are going to give it more room coming out, and they're not going to be in the thing yet. But I think that for the most part, I am. Everybody, if you're following the rules, you're going to get short this thing, come back out of it. So no longer valid on this level anymore. But I wanted to really go, and I don't go to 5-minute charts very often, but I went down to the 5-minute to really show you the difference inside of that trade. So that one, we are getting the reversal that we thought would come. It just came a little bit later than expected, and it didn't come off of this level that I anticipated. It's actually coming off of this level, which was just above it. So maybe a chance to join into the currently existing trend if you want to jump in on that. So let's talk about the Aussie. Now, I did get a question in the comments yesterday about why I use the Aussie and the Canadian dollar every day. What do they show me? The best thing I can tell you that they show me are opportunities. The Aussie and the Canadian both have really good breakout moves. That's what you'll notice most about both the Aussie and the Canadian is when they do set up for a good breakout pattern, their breakouts typically run, and they run with a fair degree of strength. So, in the Canadian, which is this one here, we've still kind of come down from this region here as it's continuing its move lower. I'm wondering what all these gaps are in here. There might have been something I was unaware of yesterday with the Canadian markets, that I've got all these gaps in these hours here. I'll have to investigate this. This doesn't seem normal. I haven't looked at this one yet this morning, so it's just my first time kind of taking a gander at it. But anyway, they give me opportunities, and I like the way that they react in breakout style trades. Now, what am I looking at today? Well, we broke down, and we broke down from this area up in here that I could get a retest for later on. So keep this area in mind for a retest a bit later. It's right around the Australian market open. In the euro, Strong move down off of this level right here. This is still higher than that reversal we had talked about for the potential of the weekly, but now we are below where that low would have been. So I think that we may actually just be in a period of basing and a period of chopping. In between there, you're going to get some decent little trades, especially looking at something like the 15-minute chart. You're going to find little tiny areas like this one right here, where we may get a little bit of a bounce. Change the color here on this. All right, so this little area could get us a bit of a bounce. You may get something in here as well, but I like this one better because it's closer to that pivot high, which was a major reversal. Which was a major reversal point. The Canadian dollar, I'm going to look into this a bit deeper. I didn't look even at my economic calendar today or any of these things, and I'm kind of wondering why I've got such limited volume here. Could be a contract rollover situation. I will take a look on this one in just a little bit and let you know kind of what I come across on this. This looks like it could be a contract rollover situation. This is typically what happens. And I'll have to compare it on a different brokerage platform, which is the other one that I take a look at things on, not just Thinkorswim. So next, last but certainly not least, let's look at our Great British Pound, Japanese yen, copper, and natural gas. Our copper level blew right through. Tiny little level, didn't hold at all, blew right through, came back up, and then blew right through again. So this level just absolutely failed. But and in stark contrast to that would be this level from the Japanese yen. Now, looking at this Japanese yen level, you did get this area here, which was a breakout, and then price came down. Is that a false breakout? Absolutely not, because if you get long on the breakout, your stop has to go below here. Remember, your stop goes below the prior pivot. So you got this, you got a little bit of a breathing room here, and then boom, goes the proverbial dynamite. We got a big pop up out of that level. So it's continuing its run higher from this point. If you want to jump back in, you may get a chance at a reversal somewhere back in one of these two regions. But I would look to have moved my stop up at least to underneath here to lock in some of those profits if you were able to catch that breakout. The Great British Pound had a strong breakdown, so it's actually running just the opposite of the Japanese yen right now. And looking at that on a 4-hour chart, so on a bigger picture time period chart, we are sitting right at this area where we've bounced off of in the past on a couple of occasions. Let me actually put a price line so it's smoother. So this area here is sitting at a support. I'm not saying this is a breakout opportunity because it certainly already made a big move down. So I would look for a potential reversal if we get some sort of momentum back up. And even on the 15-minute chart, you might get something if you do and are able to get something back into this range. This may be a good opportunity for you. Once again, finding it on the 15-minute chart means we change our color because it's lower degree of probability. So let's take a look at, somebody had asked me a while ago to look at soy. We had taken a breakdown out of this level here. It's continuing its move lower off of that long breakdown trade. When I look at this thing on a much bigger scale, move it out to a daily chart, I mean, soy is just absolutely falling off the map. Not really a strong stopping point in sight until I get all the way down to here. So if you get some sort of a rally, there's still an opportunity to join into this existing trend and to short it. And it looks like we may be getting that rally right into here. So we're on a 15-minute time scale right now. So you may get a little bit of a rally back into this region. This is where we may see a bit of a reversal coming out of it. So if you're so inclined, there's an opportunity to get short on a potential reversal right here since we're just about in it right now. All right, well, with that being said, everybody, I hope you all have an absolutely great trading day today. If there's something that I can do for you, please don't hesitate to send me an email, chuck@iiefinancial.com, and I will see you all real soon. Be safe.